is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I'm Alex Tapscott here with Andrew Young. It's been a very eventful week in the world of crypto. Last week, we saw the SEC sue Binance and Coinbase. And then over the past few days, there's been some additional information that has allowed us to cast a bit more light on that case, but also on some of the motivations of the SEC going into this suit. But first, I wanted to talk a little bit, Andrew, about the macro picture. We've had quite a start to the year for risk assets. Bitcoin and other crypto assets performed really, really well all the way up into about March, April, and then have kind of stalled out. But the NASDAQ equities in general have not slowed down. If anything, have accelerated, especially on the back of the NVIDIA print, the earnings print we saw a few weeks ago, and some additional positive guidance from other big tech companies, including Oracle last night, which beat expectations and has also hit an all-time high. So it seems like everyone's kind of all in on innovation and tech leading the next round of the bull market. And adding fuel to the fire, we're seeing some positive signs on the macro front in terms of the inflation numbers, the CPI print. Do you want to talk a little bit about the macro picture and see how we can put crypto in that context?
Yeah, totally. So we've been talking for a while on this podcast about how CPI is kind of programmed to continue falling, at least until sort of July, just due to sort of the base effects of the prior 12-month readings kind of falling off. And so we have one more big reading from 12 months ago. That was essentially a 1% month over month increase. That's going to roll off. Next month is supposed to be kind of like a 0.2% increase. So sort of as long as there's not like a blowout number next month, CPI is going to fall to like roughly 3.1, 3.2%. Before sort of slightly rallying to like 3.5 to 4%. And that's at least looking at core inflation. That seems to be where it's going to be sort of staying. At the same time, though, we talked about this a while ago. Most of what's still in the sort of, red column for inflation is shelter, which tends to be a lagging indicator. And if you look at leading indicators of shelter, those have rolled off pretty significantly. So it looks like we'll have probably sort of 3 to 4% inflation for the next, I'd say 4 to 6 months, and then in 2024 we should get closer back to the 2% target. One thing that's been really interesting that I've been talking with some people is it doesn't seem like inflation is going to get back to the 2% target anytime soon, and but at the same time, high inflation sort of solves a lot of issues that the U.S. has just in terms of interest cost, or sorry, not interest cost, but just in terms of the debt pile. So obviously, U.S. right now is like a $32 trillion debt, and the easiest way, and there's pretty much no way of cutting any of the top three sort of things contributing to the government deficit each year, which I believe is military entitlements and interest costs. And so the only real way that the U.S. government is going to be able to get out of their fiscal situation is to effectively inflate away the debt by posting, 5-6% nominal growth, and maybe even only like 0 to 1% real growth in there.
Yeah.
Anyways, so I've been thinking about this a lot, and I think that long term, what the Fed is probably going to do is just increase the Fed inflation target to 3% and just tolerate higher inflation for longer. And what was really interesting is last week I saw a note saying that the Fed's thinking of adjusting the range from a 2% target to a 1.5 to 2.5% range. And so it's kind of interesting to see that they're already starting to think about doing that. And I think what will end up happening is the Fed will actually raise the target inflation from 2% to 1.1 to 3%, or even like 2 to 3%, and just effectively just allow us to have higher inflation for longer, which is maybe sort of the long-term solution to persistently high inflation, is just adjust the target effectively. But anyways, to bring it back though, overall low inflation generally is very good for risk assets because lower inflation allows us to have, like we said a ton on the show, allows us to have lower interest rates. Most of crypto is very long tail risk assets, so they're priced based on earnings well into the future, and so the effect of lowering the risk-free rate has a proportionally larger effect on prices. And so lower inflation is unambiguously good for crypto, especially now that we've kind of all given up on this idea that Bitcoin's an inflation hedge, or at least it's not yet that. So,
interesting. I mean, how then to explain for the divergence between crypto and other risk assets? We've seen the NASDAQ and Bitcoin and other large cap crypto assets trade more or less in line all through 2022 and into the first part of this year. And just as we wanted to see that continue, it actually breaks, right? Why the divergence?
Yeah, so what's interesting actually is if you look at the stock market, most companies actually haven't recovered. It's really just a couple massive tech heavyweights that are just leading the index higher. If you strip those out, from what I was looking at a couple of days ago, it looks like the markets actually haven't really recovered. It's just it's tough for the market to go down when you have Nvidia going from adding $250 billion in market cap in a couple of weeks. So I think partly like the strength is a little bit just concentrated to the AI mania that's kind of happening right now.
Yeah.
And then crypto, I think crypto, we talk about this a lot, but crypto, it's really boom or bust. So this isn't a good enough environment to get retail back trading crypto. And so because of that, it's still mostly just like the diehard crypto guys trading coins amongst each other. And I think really until we get more staking products that institutional investors can buy, and essentially get people chasing yield into the space, I think yield is going to be the next big driver of the market. Then I don't think there's really like a catalyst for retail or institutions to come back into crypto, which to be honest with you, I'm actually okay with, like as an operator in the space. I would still like another kind of 6 to 12 months to wash away a lot of the crap in the ecosystem and sort of rebuild valuations to be more sustainable. What has been really interesting is private market valuations have actually come way down.
Yeah.
So crypto, I'm not sure if you've even seen this too, but in crypto, like pre-seed rounds are now being done at like $5 to $7 million, with seed rounds done at like 10 to 15, 10 to $20 million valuations. We
have to say is like a 20th or a 40th of what they were at the peak of the market. Like there were concept pre-seed projects getting valued in the hundreds of millions of dollars during that part of the cycle. Yeah, that's interesting because I was wondering when that was going to happen. Obviously, things that can mark to market and have a liquid market can reprice almost instantly, right? And so you've seen a lot of these liquid like layer ones and some of the DeFi projects get really hammered the last year. But then you hear about private market valuations are super sticky. But of course, it just takes time for those to reset because they're on a slightly longer cycle, right, than what you see in the actual market. Yeah, and also people don't really have at least for like seed and Series A deals that are still private, there's not a huge incentive to mark down portfolios, at least on the VC side, because obviously, they have to show that to LPs. So there's sort of like a implicit, I guess, agreement not to do like down rounds at least. And at the same time, a lot of like when crypto goes down, like the liquid stuff goes down, a lot of VCs retreat to private because there's no mark to market there, right? So you can kind of like you can just mark it at whatever the last valuation was, and so you're able to sort of weather the storm
whether that's kind of like real or not is a secondary sort of concern. But
yeah,
I'm curious what you've been seeing, because you sort of talk to more institutional investors on a day-to-day basis, whereas I'm talking to more, like, I would say, crypto specific VCs. What is like the institutional investors' take on the crypto market? Is it just kind of apathy, or is it mild interest now that the sector's been beaten down so much? I'm curious.
Yeah, I would say for the most part, most institutions have not formed a view on this. I think everyone was kind of hoping that the institutions were coming in 2021. And it's true that there were a few institutional investors that invested privately into, individual companies or into VC funds, or in the rare case, actually bought crypto assets themselves. But overall, that's the minority. I can say, with the launch of our new Web3 Innovators Fund, ticker symbol TKN on the TSX, we are seeing a lot of curiosity from people who we haven't heard from in a long time. I think they're really interested in the idea of Web3 as a technology having a big impact on business, right? What is the way in which this is going to kind of change dynamics in markets? Will it create winners and losers? Who are those winners and losers? Will new businesses get listed? How do you pick the good ones there? How do you get exposure to, growth on the company side, but also on the crypto side? And we're trying to navigate all of those different, objectives with the new fund. Anyway, but I would say that, interest is very strong, but I wouldn't say that, I would say that it's mostly curiosity. And I think you're right. It's like when things go down, most retail investors get upset because they buy high, sell low. And you'd think most institutional investors, like smart money, if they haven't bought when things get cheaper, it's like, look, you go to the store, if the same thing you're interested in is 50% less expensive, then maybe you're more willing to look at it, not less willing to look at it. And that's always a funny psychological dynamic of investing, which is the cheaper something becomes, somehow the less attractive it becomes. Sometimes that's for fundamental reasons and reasons that impact the value long-term, and sometimes not, right? So you got to figure that part out as well. But I would say that the curiosity in the space is quite high. On the crypto side itself, I think the next few months here is going to be bumpy. And mostly it seems to be driven by the regulatory situation in the US. I know that our listeners are really curious about our take on that, so we will get to that in a second. But just as an example of the knock-on effects of this, so over the weekend, we saw a lot of the smaller crypto assets sell off. Bitcoin and Ether held in pretty well. They were down a couple percent, but Cardano, Solana, Cosmos, Algorand, some of these other ones, we're down like 5, 10, 15%. And did the value of the projects just suddenly decline by 15%, or was there something else going on? There's something else going on, from what I heard, was basically in the wake of the SEC's suit against Coinbase and Binance, a lot of market makers and exchanges and OTC desks concerned that they themselves would become the target of scrutiny, chose to basically deplatform or not support a lot of those assets. And so without, like, say, market makers who, as you well know, Andrew, create liquidity in these individual names, a single sell order, at the market can absolutely crush the price of an asset. And a lot of those things have recovered, maybe halfway from where they were, but the effects of that sort of coordinated sell-off event are still being felt. So what will it take for market makers and exchanges to get back into the fray? Well, they need clarity. And when we're going to get that? Well, there's not a clear timeline, because we still have to wait for the SEC suits to go through the system. Maybe we get some clarity from Congress through, new laws. Maybe we have to wait for another election. All of these things are weighing on the asset price, and that's causing some short-term pain. Long-term, I'm actually more bullish than ever on Web3. And part of that is because of what we're seeing internationally. But part of it is also, I think that if anything, it's brought these issues to a head in the US, and it's going to create some clarity one way or the other. Markets hate uncertainty more than anything. And having some clarity, I think, is going to create some confidence in the conditions for people to step back into this market.
Yeah, I think one thing also to add, one of the big things over the weekend was Robinhood announced that they were no longer going to support trading, like you said, in Solana, Matic, and all these coins. And there's sort of like a widespread belief that people who hold their crypto funds on Robinhood, they're not necessarily going to withdraw those funds to like a MetaMask wallet or a third-party custodian. For the most part, people who use Robinhood, that's like their main, that's their main tool for holding crypto. And so the terms and conditions of that release of Robinhood was that if you don't withdraw your Sol, Matic, or I think it was Atom was the third one, by X date, then they would just liquidate it into cash.
Mm-hmm.
And so a lot of that action was just people sort of, I guess, front running future multi-million-dollar dumps of those tokens on Robinhood, combined with the fact that all these people are all these market makers are pulling liquidity as well. So you're having sort of forced selling into a very illiquid market. There's kind of a counter argument that some people think like Robinhood users will just redeploy that cash into either Ether or Doge. So maybe there's like a minor positive catalyst coming up from that. Those coins are a little bit more liquid, so I don't know how much that would really do. But it does seem like, at least within the US, we also saw some news that crypto.com, which is the sponsor of the the Lakers arena. It's crypto. It's no longer Staples Center. Obviously, it's crypto.com arena. They're pulling out of the US as well. So they closed down their institutional US exchange. And there's kind of rumors that they're maybe next on the chopping block from a regulatory enforcement angle. So it just seems like kind of widespread collapse in liquidity for altcoins in the US market, which, to be honest, it kind of reminds me of when China banned crypto. At the end of the day, the industry keeps ticking, and it kind of hurts in the short term, but I guess there's an argument to be made that it makes it easier for the next bull market to come, because we're making the market so much more liquid that we don't need that much more inflows to really drive prices higher.
Yeah, I mean, that's like I think that's a kind of cynical view on the next bull market. My hope is that the next bull market's driven by widespread use of decentralized applications that are fun and value add, like say SX, for example. Yeah, who knows? We'll see. You did make one interesting point. Well, you made several interesting points, but one thing was, it's not the end of crypto, and the evidence we're seeing from all around the world, I mean, is quite staggering. In the period of time when the U.S. situation is probably at most in flux, we're seeing the clearest message ever from a lot of other places that they're really keen on supporting the industry and growing innovation. So, for example, we've talked about Hong Kong opening up post-COVID as a way to attract capital and talent. We talked about Singapore. We talked about the UAE offering billions of dollars of incentives for entrepreneurs to set up there. We've talked about even mainland China, Web3 with Chinese characteristics in the white paper we saw out of Beijing. And just most recently in the UK, Andreessen Horowitz, A16Z, announced that it was setting up its first foreign outpost outside of the United States, and it had chosen London for several reasons, deep talent pool, capital markets, long history of, private enterprise, blah, blah, blah. But it's obvious that one of the reasons was that they viewed the regulatory and policy climate as being maybe more accommodating or more supportive. And to throw fuel on that fire, just to prove that, in the actual press release themselves, they had a quote from the Prime Minister of the country, Rishi Sunak, who has only been in the job for 9 months, but has clearly made driving tech and innovation a staple of his policy. And this is really interesting to me. I mean, the UK is not China, it's not the United States, but it's a G7 country with a large, mature economy. It's got a deep, skilled workforce. London's the financial, center of Europe still, even after Brexit, and still one of the major centers globally. All of these things are suggesting to me, at least, that Web3 continues to kind of happen everywhere to everything all at once. It's not located in Silicon Valley, the tech Galapagos of Web1. It's located everywhere. And that's something that we're seeing more and more evidence of. So, the US is putting itself on a course to become less relevant in this industry through these kinds of actions. And I hope that they change their tune, right? Because there's a lot that they can offer
Yeah.
A lot of value in that, the biggest, deepest, market in the world.
Yeah, totally. There's actually kind of there's like a positive side, I think, to the US being very strict on this, though, which is sort of underexplored, which is the US is going to have the sort of highest requirements for a project to not be effectively regulated. So the only it's looking more and more like, to get access to the US market, you have to be fully decentralized. So in some ways, by having very tight, I guess, regulatory requirements of what's allowed, because it seems like for the most part, everyone kind of agrees Bitcoin and Ethereum are allowed in the US because they're fully decentralized. It looks like there might be a coming battle on Ether, but at least as of now, there's futures on Bitcoin and Ethereum. So it looks like mostly settled that BTC and ETH are allowed in the US, and that's mostly because they're the most decentralized crypto assets. So the US could end up become this like incentive for projects to be fully decentralized, because only by being fully decentralized will you essentially get access to the US market. And so in a sort of weird way, it's actually incentivizing true decentralization of crypto, which is kind of a good thing in a lot of ways. So,
sir, I think you are smoking too much opium, because even if a project is decentralized, sufficiently decentralized, that doesn't seem to be the thing that they are interested in. They're looking at the investment contract, the origination of the project, and saying, so long as the way in which it was founded and began was, an investment contract, then it will remain so in perpetuity. Like, I personally don't think you can make the case today that Cosmos is like a company and that atoms are equity. I mean, it's clearly a decentralized network. The token value is clearly tied to, activity that's happening from developers using the technology. It's not a management team, working together to create value at all. And that's probably one of its biggest doubt. Like in Cosmos's case, it's so freaking disorganized. How you could call it a security, I have no idea. But that disorganization should be its strength. Anyway, my point is only, it doesn't seem to matter to the SEC. Like the things that they've said are securities are basically everything except Bitcoin and Ether. And I'm not convinced that they're not going to try and go after those guys as well, ultimately, if they can kind of wrap their heads around the rationale. But maybe I'm wrong. Maybe the sufficiently decentralized thing that was proposed years ago and actually becomes law. I don't know. I mean, that would be pretty amazing, because I think you can make the case for many projects that they are sufficiently decentralized already today. So I'm hopeful. I think you're overly optimistic on that one.
Yeah, I mean, I'm generally overly optimistic on things. I think.
Are you?
I think yeah, I would say I'm usually pretty optimistic. Though I kind of agree with your take from earlier that I think the next 6 to 12 months will be pretty rough in crypto. I think we're kind of at the phase of the bull market where we're at kind of like the despondent phase.
Bear market.
There's not. Yeah, sorry, of the bear market. We're at the phase of the bear market where no one even cares because there's no one left. Which sort of the only people left are people who are, like I said, the true diehards. And so I think it is kind of interesting. Like, I think like at this point, like there's kind of like a meme on crypto Twitter, which was 6 months ago. It was like, it's over.
Yeah.
And now, and the current meme of crypto is, it's so over. It's not even funny. Like, it's not even, we're past the point of even caring to panic because there's nothing left. Which kind of makes me think that we are very, very close to the bottom. Like, if not, we've already hit the bottom, just because the space has been pretty much completely washed out of the quote unquote non-believers. And I think, give the sort of developers and teams working in the space 12 months to continue building tech. And I think that sort of sows the seeds for the next bull market.
Yes.
And so, yeah, I'm actually quite, I guess short term, I'm still very bearish on crypto, but long term, things are actually looking pretty good. So yeah, I'm pretty excited.
I agree. I'm excited too. let's hope for the best, prepare for the worst. And in the meantime, just keep recording podcasts because, there's always a bull market and guys wanting to hear the sound of their own voice. By the way, I don't know if this is what episode we're at. I have a feeling that we've hit some kind of major milestone. Let's just take a look here. 99. Holy moly. Andrew, do you know what today is?
No idea.
Episode 100. If I had known, I would have prepared more and brought on special guests. Maybe next time we'll bring someone special on. Wow, can you believe that? I think we should just give ourselves a little round of applause for that, just quickly. Let's get our producers to make clap for us, please. Unmute your line. Thank you.
Sure. We did it.
Yeah, great time as always. We'll see you next week. Take it easy, buddy.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.